While the overall Bay Area market saw varying activity across counties in November of 2025, the luxury market, homes over $3 million, actually saw significant strength with a median price now of over $4.05 million, which is 6.5% higher than the general market high of June of 2022, especially in specific counties like Santa Clara, where the number of sales above 3 million are past record highs of 2021. At the time of this recording, which is the end of November, the number of sales over $3 million are at 1,787 for the year, which is almost near the all-time record of 1893 in 2021. We will see how December finishes on. So what is going on? Let's dive into what the numbers are telling us. In our luxury videos, we used the $3 million mark as our cutoff because the median price point amongst most of these counties combined is about $1.7, $1.8 million. Now, for some areas like Palo Alto, Los Altos, Atherton, Hillsborough, Saratoga, $3 million might get you a complete teardown or a luxury townhome. In these communities, we're really talking about those $4 to $8 million range and up for true luxury. But there is a large segment of Silicon Valley and the peninsula sitting in that $3 to $5 million range with significant transaction volume. And to some buyers, it's considered definitely luxury, and to others, it may be just their entry level. So we're going to be looking at November 2025 data across our core markets: San Francisco, Santa Clara County, San Mateo County, and then specifically these ultra luxury markets of like a Palo Alto, Los Altos Hills, Hillsborough, Atherton, and Saratoga. Sorry, my clients in Marin, Contra Costa, and Alameda County. Those counties are doing well. However, the total number of $3 million and up transactions range in the 2 to 300 range for the year versus what you're going to be seeing momentarily of these different counties is significantly more. Let's start off with the one that has done the best, which is Santa Clara County. Santa Clara County continues to show why they are the dominant county in the Bay Area. The median sales price is sitting at $1.635 million, up 4% year over year. But here's what's really interesting. Homes are selling on a median of just 14 days. That's remarkably fast for everyone that's predicting the end of the world. For our luxury tier over $3 million, there are already 1,787 homes that sold, which is very close and approaching the highest of 2021, which is 1893. That being said, we're seeing properties priced right moving very quickly, while anything that is overpriced is sitting. The difference between a 16-day sale and a 60-day sale often comes down to pricing strategy at the list time. Now, the price per square foot is averaging around $1,627, up about 2.3% from last year, which tells us rebuilds and these additions nearly always make sense in these luxury areas. But here's the most interesting stat of them all. This year alone is an all-time record, unlike most counties, of $5 million plus homes that have sold. 423 already sold this year, which destroyed the previous record of 340 in 2021. This is the only county that has broken that record. Now let's look at San Francisco. San Francisco's sales volume hit the highest overall count of the year since 2022 at 488, and the October it hit 71 homes over $3 million sold. This was the best month since May of 2022. Now the median house price in San Francisco is $1.502 million, which is up 12.6% year over year. This number is the highest since June of 2022. Now what's driving all of this activity? Well, there's a combination of factors, right? The S&P 500 and the NASDAQ are either at or near record highs. 30-year mortgage rates are in the lowest that it has been in over a year. And the AI startup boom is seriously creating a ton of wealth. Now, here's what's really telling. The sale to original price ratio is at 108.5%. But let's look at the $5 million and up segment. They had 23 homes sell above this price, which was the highest since November 2021. It's an incredible stat that I don't think the media has actually caught on much yet in terms of they may see that the lofty valuations of these companies, but they don't understand that even though they may not be public, employees and past employees, because these are not new companies, have the options to liquidate and to cash out, which clearly makes them easily multimillionaires and not decamillionaires that may be in their 20s, 30s, and 40s years old. Now let's look at another county, San Mateo County. San Mateo County in the $3 million and up range has done very well with a median at $4.3875 million, which is up 10.9% from last year. Now homes are selling in a median of just 16 days. So if you're a seller in San Mateo County and your home is sitting on, let's say, 30, 60, 90 days, you're either overpriced or there's a property/marketing condition issue. The median price per square foot is at $1,589, which is 8.1% higher than last year. Now, for our luxury segment, we're seeing strong demand in specific cities, though. Burlingame, Hillsborough, San Carlos, San Mateo, Millbrae, and parts of Redwood City in that county. Now, here's an incredible stat, too. For the $5 million and up homes in San Mateo County, we are already at 273 for the year. This is one less than 2022, but still a bit behind the numbers of the 333 of 2021. Now, let's talk about the ultra-luxury markets. Atherton continues to command top dollar, where the median price for November is $10.7 million. The number of sales has been 70 for the year, so it is not a shortage of demand, but it's a shortage of people wanting and willing to sell at a reasonable price. To give you perspective, the median days to sell is 12 days, even at $10 million and up. Now let's talk about Saratoga. This city, along with some of the other ones I'll point out, are areas with large lots that continue to do very well. The median price for single-family homes in November is at $4.4 million, which is 7.7% higher than last year. Now, unfortunately, the number of sales so far is at 216 versus last year, which was at 262. Which shows you not many want to sell, so we are likely going to continue to see price growth in this area. Next, we look at Los Altos and Los Altos Hills. It continues to do very well at $4.68 million. While the market fluctuates quite a bit depending on the property type that happens to sell, homes continue to sell in just 8 days. This has been a huge benefactor from the NVIDIA and AI boom. Now you look at Palo Alto, which actually hasn't done well as much as it could have been, and it hasn't done historically. The median price for single-family homes in this city is $3.55 million. And while the median price is actually slightly lower than last year, this doesn't share the whole story. For homes that sold over $5 million, Palo Alto this year has already had 107, beating last year of 87 and the record of 2021 of 88. This shows that the luxury buyers have continued to still make moves. Now, Hillsborough is a version of Los Altos just simply to the north. So far in 2025, they have sold 84 homes over $5 million, which is the highest over the last few years, but still lower than the 97 from 2021. Their median price point will fluctuate all over due to whatever home happens to sell in any given month, but it is still a desirable market. Now, what does this mean then for buyers and sellers? What do you do with all this data? If you're a seller, this is still clearly a good market. You cannot price based off of what your neighbors sold for 6 months ago. The market has bifurcated, where properties priced right are still seeing multiple offers and selling above ask because they are listing it lower on purpose. But the properties that are overpriced, they are getting penalized and they may actually end up getting delisted. The days on market is your tell because you can see and look at the ones that are actually selling. Most are still selling in less than 3 weeks. So if you are over 3 weeks, you are overpriced, period. Find a new agent or a partner to work with you to recalibrate numbers and relaunch that marketing. Now, if you're a buyer, time is not necessarily on your side in the luxury market because think about it, they're in the same exact places that has been there for decades, right? Think about it. Los Altos, Palo Alto, Atherton, Hillsborough, Saratoga. We didn't cover like Woodside, Portola Valley. These markets are always going to be competitive. You need to be pre-approved. Have your stocks ready to go, perhaps be liquid so that you can make strong offers when the right property comes around because you don't have time to do contingent to sell kind of offers in this market. But if you're buying the sub, let's say $2 million range in any of these areas, especially in other counties, there you're going to see a lot more opportunities to be able to potentially negotiate depending on how they have it priced. But you need to be strategic. Work with someone like myself who understands these micro markets. Because here's the reality. If you're both buying and selling at the same time, the timing actually matters less. Because if you think about it, if your sell price adjusts down by 3%, the property you're buying likely at a higher price point may have even got it up even more. You have to make that adjustments appropriately. Now for first-time luxury buyers or people moving up significantly, most of them are going to be making longer-term plays. Real estate for condos and townhomes are usually held in, let's say, 4 to 8 years. But these luxury markets, people tend to hold and own for them for 15 plus years on average. That's why the turnover rate for these areas are less than 3%. So if you're planning to be in the home for a decade, these short-term price fluctuations, quite frankly, matter less than finding the right property and be able to win that property because you're not going to be the only buyer. So looking ahead, here's what I'm watching. The AI boom continues to be significant and is driving wealth creation in Silicon Valley. Tesla was a winner before, then it was NVIDIA. And it still is NVIDIA. But then you have Google that has done well. And you have all these other big companies that continues to strive for surpassing those $5 trillion marks. This is clearly supporting the luxury markets in ways we haven't seen since the previous tech boom. Because companies are still hiring. stock prices have still been rising, and high earners have a lot of cash to deploy and they may want to divest. Now, at the same time, interest rates have come down in November to their lowest point over a year, and we're hopeful that next year will unlock even more buyers because of this, because there's so many people that have been waiting on the sidelines. Simultaneously, good properties, those inventory remains still the big constraint. So until we see a lot more listings come to the market that are more willing to sell at realistic numbers, this is still going to be competitive for some time, especially at this $3 million and up mark, because the bifurcation is absolutely here. Well-priced, well-presented homes are getting multiple offers and selling very quickly. Overpriced or greedy sellers are getting penalized, and they either will make an adjustment or they will delist, and then maybe they'll take on the prices being higher later on. So here's my advice. We are approaching the end of the year. If you're thinking about making a move in 2026, start planning now. Sell stocks. Maybe figure out, should you sell your home in the spring or sell your home now? Get your finances in order. Figure out how you want to consolidate to be able to get to the purchase power that is needed to be able to actually buy one of these homes. Determine when your lockout periods are. And most importantly, work with someone like myself who has deep market knowledge and has helped over 70 families every year and specializes in the luxury market space with our data-driven approach. Because the Bay Area luxury market isn't uniform. It's dozens of these micro markets, each with its own dynamics, with its own inventory challenges. Whether you're in Los Altos seeing 8-day sales, or you're looking at properties in East Bay that's been sitting for 60 days plus, strategy matters more than ever. So if you want to dig deeper into your specific neighborhood or price point, or if you're considering a move in the luxury market, reach out. Let's chat about what's happening in your micro market and create a strategy that makes sense for your situation. Thanks for watching. I'll see you next time.